Welcome to this guide on expat finances. Living and working abroad brings exciting opportunities, but it also creates unique financial challenges. Managing money across multiple countries requires understanding complex tax systems, navigating international banking, and protecting your wealth from currency fluctuations. Whether you're planning to move abroad or already living as an expatriate, mastering these financial considerations is essential for your financial security and peace of mind. Expats face three major financial challenges. First, tax obligations become complicated when you might be liable for taxes in both your home country and your host country. Understanding dual tax residency and reporting requirements is crucial to avoid penalties. Second, banking access can be difficult as you need to maintain accounts in multiple countries while dealing with different currencies and regulations. Third, currency risk is a constant concern. Exchange rate fluctuations can significantly impact your wealth, especially when you're earning in one currency but have expenses or assets in another. Tax residency determines where you owe taxes, and it's based on two main factors. Physical presence is the most common test, with many countries using the 183-day rule. This means if you spend more than 183 days in a country during a year, you're typically considered a tax resident there. Even partial days may count toward this total. The second factor involves domicile tests, which look at where your permanent home is located, your economic ties and business interests, and your family connections. Some people can be tax residents in multiple countries simultaneously, which creates complex obligations. Double taxation treaties are agreements between countries designed to prevent you from paying taxes twice on the same income. These treaties allow you to claim foreign taxes paid as credits against your home country tax liability, reducing your overall tax burden. However, there's an important caveat here. Even with treaties in place, filing requirements still exist. You typically need to file tax returns in both countries and properly document your foreign tax payments. The treaties don't eliminate paperwork. They simply ensure you're not taxed twice on the same income. Banking as an expat requires careful planning. You'll typically need to maintain accounts in both your home country and your host country to manage local expenses and maintain ties to your home financial system. Banks will require tax residency certificates to ensure they're complying with international regulations. Consider using international banks or those that specialize in expat services, as they understand the unique challenges you face. You must also understand FATCA and CRS reporting requirements. FATCA stands for Foreign Account Tax Compliance Act, while CRS means Common Reporting Standard. These systems automatically share your financial information between countries to prevent tax evasion. Managing multiple currencies effectively can save you significant money. For exchange strategies, consider using forward contracts to lock in favorable exchange rates for future transfers, and time your currency conversions during periods when rates are more favorable. Multi-currency accounts allow you to hold funds in several currencies simultaneously, reducing conversion fees and protecting you from timing risks. When transferring money internationally, always compare transfer fees across different providers, as costs can vary dramatically. Some services offer much more competitive rates than traditional banks. For large amounts, consider currency hedging options to protect against major fluctuations that could erode your wealth. Investing as an expat is more complex than domestic investing. First, tax treatment of investments varies significantly by country. What's tax-advantaged in one country might be heavily taxed in another. Second, pension contributions often have cross-border restrictions. You may lose tax benefits or face penalties when contributing to retirement accounts while living abroad. Third, most countries have strict reporting requirements for foreign accounts and assets. Failing to report can result in severe penalties. Finally, consider investment structures specifically designed for expats, such as certain offshore accounts or international pension plans that offer more favorable tax treatment for people living across borders. Retirement planning gets complicated when you work in multiple countries. Totalization agreements are treaties that coordinate social security benefits between countries. They help you avoid paying social security taxes to both countries simultaneously and allow you to combine work credits from different countries to qualify for benefits. For private pensions, carefully check portability rules to ensure you can move your pension when relocating. Understand the tax implications in both countries and review any withdrawal restrictions that might apply. Contribution limits often differ based on your residency status, so verify your eligibility before contributing. When receiving benefits, pay attention to the currency of payment, as this affects your exchange rate risk. Also consider tax withholding requirements and transfer costs when planning how to receive your pension payments. Meticulous record keeping is absolutely critical for expats. First, maintain detailed records of all income sources from every country where you earn money. Second, track the exact number of days spent in each country, as this proves your tax residency status if questioned by authorities. Third, keep bank statements from all countries for at least 7 years, as tax authorities can audit you going back several years. Fourth, document all foreign tax payments with official receipts, as you'll need these to claim foreign tax credits. Finally, store digital copies of everything securely with cloud backup. This protects you if physical documents are lost and makes it easy to access records from anywhere in the world. Let's summarize the essential points. First, always seek professional guidance from tax advisors who specialize in international regulations. The complexity of cross-border finances makes expert help invaluable and can save you far more than it costs. Second, stay compliant by filing all required tax returns and disclosure forms in both your home and host countries. Penalties for noncompliance can be severe. Third, plan ahead by understanding all financial implications before you move abroad. It's much easier to set up proper structures in advance than to fix problems later. Finally, conduct regular reviews of your financial strategy. Tax laws change, your personal circumstances evolve, and what worked initially may need adjustment. Staying proactive protects your financial future as an expat.
If you like this video, hit that like button and don't forget to subscribe. Visit codelucky.com for more such useful content.